Hello, welcome back, guys. So I'm going to tell you why I like Alphabet or Google stock quite a lot, and of course, it's part of my portfolio. Now, the company, the stock price actually of the company, has been going down recently. And if you take a look at the 3 month chart here, you will see that this is a story of going up and down, a little bit of a roller coaster here. And taking a look at the 3 years chart, you will see that overall the company's stock has been going higher, yet lately been slacking a little bit with the overall market, I suppose. It's down almost 30% since its 1 year high. Now, the thing is, we will be examining the company's stock price and the company as a whole just to see whether it makes sense to be buying the company right now. Obviously, this is a behemoth, this is a super large company, and you will see that its P ratio is sitting at near 20. Now, it would be amazing to be able to buy a company like Google at a PE of 10 or something of that sort, but this is kind of unlikely to happen. It could happen if there is a massive recession potentially. Yet, as it is going down, as the price of the stock is going down and the earnings of the company are increasing, you are looking at the price to earnings ratio going lower, and this means you are buying it for a better price than before as it's going lower. The same thing with the price to free cash flow ratio. You may be looking at a red here because the software, the tool here will tell you that a stock is actually red over here if it's more than 20, but this is sort of like an average. If we're talking about a software company of this sort, a company that is still growing a ton and it's making huge piles of cash here, this is still a green, practically speaking, and we're going to be examining in more detail the financials here and see why I consider Google to be a great addition here for my portfolio. So, the outstanding shares of the company slightly down, not too much, but we do know that the company is going to be buying back shares. Now, they have a lot of shares in the market right now because of the recent split, of course. And the total ability to free cash flow is always an important metric here because it tells you how much free cash flow the company has in relation to the total liabilities that they have. And so the smaller this number is, the more free cash flow they generated last year in order to pay back all the total liabilities that they have, indicating that this is a very solvent company that doesn't have a lot of trouble paying back its debt and any other money that they owe to potential suppliers and things of that sort. Now, in terms of the metrics, the key metrics here, take a look at these numbers. Amazing here. Revenue growth of 132% since last 5 years, and we are talking about a massive company making billions. So they are approaching like 200 and almost 300 billion pretty much. In terms of its net income growth, again, the same story here, from 10 to 80, almost. That's insane, absolutely amazing here. In terms of free cash flow growth, the same thing, and total equity growth, again, the same thing. And this is why buying this company at a potentially a little bit of a higher PE than you would like, even though it's still pretty nice, makes a ton of sense. And of course, we are going to be examining that in more detail with using our stock evaluation tool, with which we're going to be examining the price to pay for today. But it's important to know that a company that grows that much and it's already so large, they have an insane amount of retained earnings, the stockpiles, cash piles, insane reserves of money, is great to be adding to a portfolio. Even if it is slightly more expensive than you would like, which may not even be the case here with Google. And in terms of the margins, take a look at the margins, also pretty high. Another great thing for a company to be adding to a portfolio. Even the price to sales ratio here for a company like Google is going down, which is pretty nice to see. So good stuff here for Google. Amazing stuff, frankly. Return on equity as well, pretty high. All of the returns pretty high. So let's take a little bit of a closer look at the income statement now. And you will see here that from 110 billion, they grew up to 257, which, as you can understand, is absolutely amazing here. Insane growth here. Take a look at this one, 40% last year. And in terms of the net income, 12 billion to 76 billion is out of this world. Is insane amount of growth here. Again, for the net income, which is even more important because it's money in the pretty much money in the bank. So balance sheet, and you will see that the company's total equity has been increasing, 152 billion to 251. Their total liabilities are sitting at about 108 billion here, as you'll see. And you will notice that the retained earnings, pretty much the bank of earnings that the company accumulates through the years, keeps increasing. So they have a ton of cash, pretty much, as I mentioned earlier, in the bank. Now, the cash flow statement, you will see that they generated about 91 billion of operating cash flow over here. Again, it is a company that is making tons of cash. If you take a look at the free cash flow, it's sitting at 67 billion here. Remember their total liabilities were 107, meaning it's about 1.5, 1.6 in terms of a ratio there. And in terms of financing, minus 61 billion here because they're purchasing common stock. And of course, as a shareholder, you love to see that. One of the core reasons why I wanted to get some Google stock, among the many reasons, frankly, but this is an important one. In terms of cash from investing activities here, you will see that it is being also negative, which is a good thing, of course, because the company has been investing a lot in capital expenditures here and also purchasing some investments. Again, purchasing quite a lot of investments here for the company. It's nice to see here, of course. And of course, also selling some investments as well, because you need to be, buying some investments, selling some investments. It's sort of like a game here of inflows and outflows in terms of investing. And Google is, playing this game fairly well. It looks like here. In terms of how much they bought and sold, it looks like they were a net seller pretty much back in 2021 here. Interesting to see, but not much of a difference, frankly. Okay. In terms of insider selling or purchasing here, not so much to see, frankly. You will see some sales here, which are a very small percentage of their own securities here. So it doesn't look like a lot of directors are looking to be selling a lot of stock here. Of course, some owners here are holding a lot of stock and selling some. It makes a ton of sense here. But overall, you will see that they are not really selling that much, especially lately. I guess as the stock price has been going a little bit down, they don't seem to be selling a lot, and they still own quite a lot of securities here, it looks like. No purchases as well, though. We're not really seeing anybody purchasing with their own money here. Now, if we take a look at the senator trades, it's also interesting that we're not really seeing much activity here as well. Just a small sale here, a small lot as well. Previous one over here, Scott Franklin, which they actually transacted back in March over here and purchased again a small lot here. As usual, we can always take a look at the trade as a whole here if we want. Like we can see the exact filing if we are interested in this one using our tool here. But overall, we are not looking at much activity happening here with Alphabet. Okay, so we go back and take a look at our stock evaluation tool, which is coming up next, and we'll see what kind of price to pay for the stock. What kind of price it makes sense to be paying for this one, as it is currently sitting at $188 almost dollars. Again, remember after the split, now the tool here will tell us, if we take a look at the splits history, that the most recent split happened in July 18th, and it was a 20-to-1 split, so every one share was converted to 20 shares pretty much. So this is why the current outstanding shares count is much, much higher than it used to be. Okay, so let's go back to our stock evaluation tool now that we saw about the split. And let's examine what is happening here with the company and its revenue growth. Now, you will see that the company's revenue growth has been sitting at 24% almost. And of course, we will go lower because we are expecting the overall market, I'd say the overall US market, frankly, to kind of make less revenue growth for the upcoming maybe 1 or 2 years. I mean, we're currently sitting in a period of time where we're potentially maybe even looking at a recession. So we have to be a little bit more conservative here. So I will go lower. I will go, let's just say 12, 14, and 16 here for Google. They could do better actually for the next 5 years. Like they could have a couple of years where it could be maybe 10%, 12%, and then, for example, in the fourth year they could have 20, 25%. It's possible. Now, you cannot really know that for sure, and this is why we're trying all these projections. In terms of the net income margins that the company generates, we have seen that the 5-year average has been 21%, but recently it has been going higher, and the last one is sitting at about 30% over here. And I will go a little bit in between these numbers and see what we're getting out of these ones. Again, it's like the 5-year average, 21, 24, 29. So let's use these numbers actually, 21, 24, and 29 here and see what we're getting, 29. Okay, so the free cash flow margins that we're going to use, again, the company is sitting at about 90 to 100% for their free cash flow margins here. We're going to go 80, 90, and 100, and an annual return of 13% is the typical one that I'm asking from my stocks, unless there is more risk, in which case I could ask for a little bit more. We hit calculate here, and with these numbers, which of course are pretty conservative here, we're sitting at a low of 72, a medium of 101, and a high of 147. with the current price again being at 107 here. Now this may look like our low projections and medium projections are a little bit overpriced potentially based on the current stock price, but remember that not every stock is the same and not every opportunity is the same. As I've explained earlier, this is a company that has amazing margins, a company that is still growing a ton, has amazing cash reserves. It's not the same thing as buying a company, let's say a retailer, for example, in which case you would want to see all greens here. It could be that you are seeing some values that are red and a little bit overpriced, but still kind of close to the current price. And okay, you decide that because the company is actually having so many advantages, so many positives here, you are willing to pay a little bit more. And of course, again, this depends on the projections as well. Like if we use the net income margins that are, I guess, a little bit closer to what the company is doing right now, I could potentially go a little bit higher here and say that I'm saying that this is like 24, 25, 27, and 29, which is more than likely probably to be the case, I would believe. I don't think the company will be making 21, in which case even our medium projections now are green. And so for me, Google right now is a buy even at this current price, and even if it seems to be a little bit more expensive potentially for some people. But again, of course, you don't know whether this is going to be going lower or so. So I think a good idea, generally speaking, is to, if somebody wants to be adding some Google in their portfolio, just average it out a little bit, potentially even as it's going down, but if they don't want to be buying everything today. And of course, it really depends on what the economy does for the next year or so. But for a long-term hold, I mean, if you don't really care about the fluctuations of the market, and if you're not really taking this for a trade, like a swing trade, for example, which is a different story, this is a company that you can, I think, pretty comfortably hold for the next 10 years and make significant amounts of money, provided that something completely unexpected doesn't happen, of course. But it does look that it is a good buying opportunity, at least to be, again, accumulating a little bit and potentially even more as it's going down. But I really, really like what I'm seeing here, and this is why I'm holding Google. So thank you for watching, and please remember to like the video and subscribe if you are new around here, and I'll see you in the next one. But I'll probably be making a couple more videos very shortly about some of the known Nasdaq stocks like Microsoft, for example. So stay tuned, because more coming your way, and I'll see you soon again. Bye bye.